Good morning to all traders and welcome to this Wednesday's Market Insights video provided to you by Orbex. Here it is the 29th of April today. Markets continue being optimism, continue rising. Some risk assets actually in particular are doing very well. Some others don't. The sentiment increases because there seems to be this idea now, because of the news, of course, the news headlines, that the COVID-19 effects are going to be short-lived. I do believe, in my opinion, that, however, that's to be a very premature assumption. Okay, most of the industries are struggling, and they will continue struggling even when the economies reopen. And that poses one question at the back of our head. Have monetary policy really done what we were looking for to help the economies, and have fiscal policy also gone far enough? Well, we'll find out actually tonight, because the Fed is going to report, they're going to announce the interest rate decision. Obviously, there are not going to be any changes there, but we really need to talk, to pay attention on what Fed Chair is going to actually focus on. What is he going to say about credit? What is he going to say about the White House and Congress? And what is the guidance going forward? Because they are leading the markets, they are going to be the ones that other banks are going to follow. Now, at the same time, yesterday we've had some very bad consumer sentiment data from the US with the CB consumer. And that actually took the dollar down. If we take into consideration that the yen has been quite strong on the unlimited QE that was announced early on Monday, the dollar yen broke to fresh lows. Aussie on the other side, it's been moving up on risk appetite, and now we've had also the CPI data showing very good numbers, actually much better than expected. However, that is good, of course, intraday and maybe for the short term, but it will be Q2 that we're going to really see the inflation numbers being driven down further, okay? And the other pair I want to talk about, of course, is the euro dollar. We'll have the ECB tomorrow as well. So it's a very good opportunity to talk about that one as well. Now, on the dollar yen, I haven't changed my view. I'm still expecting, we've got WX and still expecting wave Y to end up here. We've had a leading triangle over here with wave A being done. I was expecting ABC to end down here. That was not the case. Since we broke below that level now, I'm just relabeling. Actually, we'll have a wave C over here. 1, 2, 3, we have done wave 4. We have the rule of alternation respected, and then we're expecting this wave 5 actually, because I believe we are in the last wave 5 now. That is going to take prices to 105.65 or even down to 104.62. Now, if we also take the Fibonacci retracement of the move to the upside, the 61.8 Fibonacci extension is around 105.2. The 50 Fibonacci is very near to the current levels, which wouldn't be surprised actually if we start moving higher from there. Now, the thing is that since we broke below wave A and wave 3 over here, we can end this move to the downside anywhere. But usually, then this is to be seen as a zigzag, of course, we end around the 78.6 Fibonacci extension of wave A. So I would assume that we could actually see prices dragging a little bit lower below the 106 at least for another maybe 100 pips or so, maybe even lower, and then start moving higher to take out wave C in the intermediate degree, which is also going to be wave Y in the primary degree. So that's for the dollar yen. I would really pay attention, of course, to what the Fed is saying tonight, right? I want to go to the euro dollar. I've changed my, I'll be honest, we are in a sideways market at the moment. The situation with the euro dollar is becoming a bit more complicated. So I've had looked at this, and due to its structure, to its current structure, and because we also have a W, X, and Y here, we're expecting, right? We've done Y, and we're expecting Y. We've done X, sorry, we're expecting Y. Y is the last wave of this correction. So I thought because we keep having corrective waves in here, right? What if this is an ending triangle? So 1, 2, we're gonna get 3 ending down here. It has to be below ideally below 10063, yeah. 3, then we're gonna get a 4, okay, and then we're gonna get a 5, and we're gonna end wave a W. These actually, the microstructures, the substructures, let's say, are showing actually respecting this projection, this idea, okay? Because we've got an ABC over here for wave W. Now we had waves A being done here, and we're expecting wave B and then wave C to take out X, and then we'll move down again. Now there's 2 different scenarios, of course, here, right? Not 2, but I'm talking about the particular scenario that I'm seeing for an ending triangle. One is that we ended A wave here. This is wave B, and we're gonna go up for wave C. Okay. The other one is this is 3, 4, and 5. So it's what you've seen labeled already. So there is 2 different cases here. One is we're gonna, if this is the labeled, if this labeled one comes through, then means that we're gonna get an ABC down here. We had A, B, and a C, and then move up. If not, and this is A, it means that B wave was here. So we're going up impulsively 1, 2, 3, 4, and 5. Okay, and the other pair I wanted to look very quickly is the Aussie against the dollar. The Aussie against the dollar, again, I didn't change anything here. I called this move a few weeks ago. The only thing I did change is that I actually call this now a leading triangle. We'll have waves 2, wave 3, wave 4, and wave 5 is probably going to take us around the 61.8 Fibonacci extension of waves 2 and 3, which is wave 3 pretty much. And that is around the 65.42, which is very close to where we are at the moment, okay? So now if we take into consideration that we'll have very good activity level here as well, okay? Then I would be surprised if wave A ends here, then we'll go down for wave B, then we'll go up for wave C. That will be the wave 4 of this move, and then we're gonna get, of course, lower lows below the previous low, but this is in the longer term, could actually go well in 2021. So thank you for watching, and I will see you again tomorrow.